What's up everybody, Tom here with another video. In today's video, we'll be taking a look at our market overview for the week ahead together, including our technical analysis levels for the SP 500, Nasdaq, Bitcoin, AMC, Tesla, gold, and more. We're about to enter the best and biggest month of the year historically over the last 100 years for the stock markets. The question is, will 2021 bring the same, or is there something looming on the horizon? Stay tuned to find out more. Alright guys, well as we like to do here on the channel, let's begin with a quick recap of what happened in the market closure for the 25th of June 2021. And you can see clearly that there was a little bit of rotation going on. Some of the tech stocks that had great runs on them, they started to pull back a little bit through the Friday session. And we had a resurgence of course, the banks and the other sectors. When we take a look at the indices, it's very clear why we see this. The Dow Jones was the best performing through the Friday session, 0.75%. The SP 500 did okay, 0.37%. And the Nasdaq basically was equal into the end of the day. The most important thing here is everything held up. And that's pretty amazing considering how great a green week we had throughout all of the markets, especially when you think about the rotation and the scariness that we were seeing 2 weeks ago with breadth, meaning the companies that were going up and the companies that were going down. Here we had financials out in the lead, utilities coming through with a 1% gain, and everything else kind of smattered between 0 and maybe 0.8%. So again, just shows how strong last week really was in the markets. Speaking of strength, let's take a look now at one of the biggest statistics that we always like to approach the markets with, and that is seasonality. If you don't understand seasonality, you don't understand which months of the year are good or bad, you're probably doing yourself a little bit of a disservice trading the stock markets, trading the markets in general. These things do matter, and they should be taken into account. So over the 1928 to 2021 period, you can see that June and July historically are very positive months. But you'll also notice that that August, September, October area is often kind of negative. So June and July, especially July, is #1 best month in terms of returns. And when we scroll down here to the last kind of 10 years worth of data, you'll also notice that July, August are two of the strongest months on record when you're talking about stock market returns over the last decade. Pretty amazing stuff, and we're just about to enter it. So I want to know from the comments down below, which do you think will happen to this year? Will July be bullish or bearish? Guys, let me know in the comments down below because we're fast approaching that time. Do also remember that this week, when we're changing over to July, will also mean that we've got non-farm payroll. So steer clear of that event and make sure that you're very well aware of what's going to happen on the Friday session. We'll talk more in this video about that very, very soon. Let's get started here with the technical analysis, and we'll get started on the dollar index. It's always important to know what's going on there. So it didn't quite get to our 91.43 last week, but we have had a couple of bounces here, and there's some candles to break down here. One of them, nice bullish candle here with a nice rejection just off the 200 daily moving average. You can see the 200, the green line here. It's a very important, well used by JP Morgan, Goldman Sachs kind of moving average, and everyone really looks at this on the daily. We've also got a strong Friday big pull up here with a pin bar and a long leg doji on the Thursday session showing indecision. So it gives us a very clear level for us to now dial into the smaller time frames and take a look at. So let's do that together right now. Let's go into the 2 hour and have a look at what's been going on. So clearly there is some resistance here, guys. Look at that. It's actually very beautiful. We've got great resistance structure through the 91.90. You know that if it closed above here this week, there's going to be some further bullish momentum up until this point, and then hopefully up to the 92.40. That's pretty strong. We've also got a great level to be looking at now and focusing on from the bear side. So if the bears get control of the dollar index again and push it underneath this level, which in this case is the 91.50 area, do you think it's going to go weaker? It's basically a channel on the 2 hour, on the 1 hour, and on the 4 hour time frame. So you've got very clear levels of resistance and support, and therefore we need to trade that accordingly. Now, what other pairs become important here? Well, of course, we need to understand that if we've got a strengthening US dollar, generally we have a weakening gold currency, or gold versus US dollar. And you can see here that gold, it's like the exact opposite. Huge amounts of negative style candles. Now it can go two ways, and that's why we've got it trapped between the 1800 and the 1760. If we breach underneath the 7060, and I think even if we breach underneath this little zone here, we should make it straight into the 1760 area for scalpers and day traders out there, then we go lower. And of course, that rally that we've seen recently in gold will continue to slump off in the direction that's been happening in the last week or so, because you can see here, since it broke through our trend line, massive shorting has come into the market, massive sell-offs, and not looking too good for gold. Now, on the bullish side, if we breach all of these buy wicks, so you can see here, these are all the levels, well, they become buy wicks, they're sell wicks at this point, and we get through 1800, what happens then? Well, we're taking out all the shorts. So all the people that have been shorting at this direction, all their stop losses will start getting hit. And then that will begin an accumulation and a participation, I believe, for buyers throughout the session. So gold and, of course, dollar index, super important to be looking at throughout this week. Some good structure forming there. Speaking of structure, we've been following US oil, black gold here for quite a few weeks, and it's very close now to our 75, 76 target zone that we had originally. I spoke about this last week, and I think we kind of got close enough. While I still think US oil can go up here a little bit, realistically, it's stuck in a bit of a range. I feel like it'll do a lot of ranging now for quite some time, and the main reason that that could happen is because when you think about it, we're approaching incredibly important 2018, 2019 highs. And if you really scroll this out and understand the price action here, you'll notice that US oil hasn't been through this level for years. Ever since 2014, we have not seen a breach of this zone when that big crash occurred on the oil markets. So it's super important to understand this, super important to realize that even if we do breach this level, historically, you'll usually see some kind of spring formation here or coiling or just like meandering around. And it's not really a great market to be technically trading when you're approaching such a key resistance. Usually you're scaling out of the order and waiting to see more in the future. Speaking of waiting to see more, AMC, guys, this thing is trapped within a very big range. We've got a range here between the 63.22 and the 50.30 level. And if we go down to a 2 hour, it becomes even more clear. It's a fully fledged channel here, and we've got some proofing. So as we said, if this thing closed underneath this zone this week, what's going to happen? $40 seems quite likely. Previous buy pressure coming in here, but I could see the sellers or the paper hands getting in on the action there and taking it down. Now, if AMC moves around and gets past the 63.22 sometime this week, again, we take the distance between the top and the bottom, which is A, or that's our difference of the channel, and then that becomes the B component. So we can see here the B up the top, the B down the bottom, and the ranges. Now, if it goes through the top, it's actually predicting a new high, about 74.30. Be phenomenal if it did so, but yeah, be careful of this one. It is weakening currently. We've got a peak, a trough, a lower peak. Will we get a lower trough, or will we breach this point here and continue to go on? Time will tell. One to watch throughout the week. Things that have been improving, Tesla. We talked about how hyper stocks, or hyper stonks, as many of you like to know them as, were doing really well over the last couple of weeks. And they certainly have been. Even Tesla came alive last week, and it hit the top end here of the trend line that we've been putting through those last couple of lows. You can see that's around that $700 mark. It makes sense for it now to probably try to fill back down through this gap. It had a very explosive move. Generally with Tesla, I would say it's a slightly better than coin flip, that it actually fills gaps, and we've got a big gap here between the points. So will we come down? I'm thinking something like this may occur. We come down a little bit, maybe fill the gap, maybe even get to the 20 moving average, test the 635 kind of area, and then start to bounce up. Of course, once we get past 700, it opens up 750 easily here for Tesla, and I think the bulls are back firmly in control of the stock. So great time here, big recovery, getting through this series of lower peaks, which has been really the bane and the biggest problem for Tesla recently, is a big deal. I think it's looking pretty good, and if we go over to something like a weekly, it'll really become apparent how important it is to see a nice big bullish candle like that. It's gotten through the 20 exponential moving average, the red line here. There's just a lot of repair going on here in Tesla, and I just hope that we can breach 700, because 700 breaching is a big deal on Tesla. And once you breach that last peak over here, you're basically putting in a base that could create the rocket ship of euphoria that we know Tesla is well known for throughout the markets. Now let's talk about the broader markets. Let's talk about the Nasdaq to start off with, and then we'll go into the SP 500 and also a little bit of the crypto, because crypto is super interesting right now as well. Well, basically, we got a massive closure here for the Nasdaq, and you can see what it is. So we breached the top, so we breached those two high resistances. We closed above the long leg doji, and we started moving forward. And I think what this does is it opens us up for a very, very, very nice potential here in the June, July months. Because when we think about what we've got currently, we've got that two peaks here. We've got a beautiful down trend line as well. So we can see where the huge supports are for the market and huge resistances. And there's a lot of runway here. I mean, if we think about it just as a pure percentage and where we are right now, that's a 5.57 if it just went up in a vertical line. So we've got the top resistance here in the ascending channel and the bottom support. We've got great support now that's going to be around that 345 area here for the QQQ. And I don't think the bears can get full control of this market until they breach these bottom trend lines. And it'll make sense when we have a look at the SP 500 as well, because this is just bullish. I mean, I don't see bearishness just yet coming into this market. Again, you look at the weekly, you look at that long leg doji. What does a long leg doji tell us at the peak? Indecision. What happened last week? Decision made. Bullish closure. We've got to go with the trend at this stage. And I know a lot of you are getting ready to short, getting ready to sell this market, and you're thinking this is all overpriced. The Schiller index, the PE index, everything doesn't make sense. I get it. I totally do by most metrics. The price action currently doesn't tell us that we can do it just yet. Some indicators are going off. Don't get me wrong. There's things like breadth. We've also got, RSIs and other things all saying overbought, overbought, overbought. But as you would know, if you've been trading the markets and investing for a long time, these indicators can stay overbought for a long time. What we want to do is see real resistances getting hit that are usually used. And then, of course, we're also matching that up with seasonals that Wall Street like to really attack, retail herd and retail mentality with. Because when Wall Street decide it's going down, that's when we want to be jumping in with them and jumping in with the algorithms and getting through it. So I wanted to bring up this US 500 chart on the 1 hour and just to show how good some of the scalps or day trades have been recently. So in our Friday session, we were talking about how we had the S&P 500 trapped between two zones. We had our supports, we had our resistances. We spoke about how it's really important that off the supports, we were having large buying candles, which gave us much more bullish intention for the day. But on top of that, if the market had shorted through this zone, it would have really meant the bears controlled the market very heavily for the day, and they'd push it down to like the 42.55 because they would have been breaching some heavy bull buying zones before. So we take the distance here, we extrapolate that out, and you'll notice that's pretty much what the market did on the day. So the market's actually acting pretty technically, and I think there's some good trades within trades here if you're looking at doing so. And that's just a great example there of the market, giving you some action throughout the session. If we go to even like a 2 hour, you'll notice that things like the 20 moving average here have been pretty good to pick up off as well or get close to for your trades. So maybe this week, the 20 moving average will be here. The market will pull back a little bit, hit it, and that might even be an opportunity to potentially look at taking the market long. It's just understanding that there's a sequence of things occurring. And when we can see that, and when we're following the trend and we're nimble, because we've got to be very nimble in this market, then we can start to make some money from these types of things and start to really hone in our skills of what we're trying to do in the markets. Let's talk about this S&P 500 on the bigger scale though. What's going on here? So we've got our community trend line. This is the trend line that we've used several times to predict tops in the markets over the last kind of couple of months, and it's been very, very good at doing so. And this is, again, got the runway. So we have the Nasdaq number one, showing us that there is a runway up to the top through what is arguably the best month of the year, July, coming up. We've got the S&P 500 breaking out to new all-time highs. And at the same time, it's still very, very far away from this trend line, the community trend line. And again, it did so not just on a daily right now. That's a weekly close to a new all-time high. We've also got some clear signs for when the bears get control of the market. Let's say the bears pushed this round next week and it got crashed down on. If it breaches under 40.63 or 40.60 area here, do we think the bears have got control of this market? I would argue yes, down to the 50 then makes sense. And the reason why? Huge buying pressure here from Wall Street. If something changed and it breached under that zone, don't we think that that means that the bears have fully got control and Wall Street is obviously playing with our emotions and obviously kind of trying to wreck the market? I would say absolutely. That would also create like a double top type of pattern. All of those sorts of things occur. We also have the 20 moving average, the mean reversion for the weekly here. And this would be being breached as well if the market was to come down. So again, we have some clear signs when the bears regain control of the market. But at this time and this stage, if we're looking at this market and thinking, where's it going? I mean, it only really makes sense that it's going to continue to try to move up over the next month and a half. Even if it comes back, you know, there's going to be buying pressure at each point it comes back here on the smaller timeframes, like we saw before on the 2 hour, 20, etc., etc., etc. So be careful out there, guys, because it's important stuff. Let's go over to Bitcoin. I think we'd be remiss to talk about Bitcoin without talking about BTC shorts. This is becoming a very good indicator for when the whales are manipulating the market. And good news for Bitcoin, guys, they are unloading here their short positions. So they've been shorting Bitcoin. They've been pushing it back down. They got us to an uneasy level literally just the last 24 hours. And then they've started unloading those shorts as we speak. So when we have a look at Bitcoin price, which we'll do right now together, let's take a quick look at this. And you see what's going on. Is there a little bit of repair occurring? There certainly is. Daily, at least, is rejected. Let's go down to the 4 hour. You can see some nice bullish candles coming through here with wick rejections. We'll go down to a 2 hour. And this is the type of closure that we just saw there that hopefully begins repair. I've talked a lot about how, you know, technicals aren't acting great in the market right now. We did have this trend line. We said underneath this would be bearish. Of course, it did go bearish. I thought it might even breach 30 at this point, but 30 is still very strong buying here psychologically. And now we've found resistance, and then breached it. So even a pullback now, let's say to the 32,300, that should be met by buyer demand because we've got one resistance, two resistance. The resistance should become support and hopefully some buyer demand comes in here. I'm actually optimistic that the market is doing the correct thing here and it is actually in full accumulation mode with multiple kind of smash sell-offs that really just take people's money and create fear and create FUD, and that we are possibly looking at, of course, that Wyckoff theory with accumulation occurring. So hopefully we continue to see this play out. We'll be laser eye focused on this in the live streams as well. It is an hour by hour type of trading market and type of investing market. So Bitcoin, one to watch for the week ahead. Now let's go over to the last thing that we want to cover today. I think you need to be very well aware, everybody, that we are in non-farm payrolls week. And that means, of course, we have the jobs numbers coming out of the US. And when we have jobs numbers coming out of the US, they don't always matter as much. But because the last couple of have really changed what the market's doing, this is an important event. Join us live as well. We'll be live streaming this event this week, and it's going to be a big one. It's going to be super exciting to see which way it goes. And I'm cautiously optimistic that no matter what the number comes out, we should be seeing a bullish market, but we'll have to really find out. It could also bring in the bears and everything could go bad. So non-farm payrolls, Friday, 2nd of July. Be careful and make sure you're aware. 8:30 a.m. just before the market opens. Join us on the live stream. Thanks very much, everybody. We'll see you, of course, Monday live stream if you're going to join us and throughout the weekly videos. Remember to subscribe, hit that like button if you enjoy it, and we'll see you in the next one. Bye for now.